Mindful investing integrates financial goals with ethical and sustainability considerations. Unlike traditional approaches, it may factor in environmental, social, and governance criteria alongside financial returns. Investors can use strategies like negative screening to avoid industries that conflict with their values, or positive screening to prioritize companies with strong ESG performance. The United Nations Sustainable Development Goals provide a framework for aligning investments with global sustainability targets. For instance, funding renewable energy projects supports SDG 7, while investing in gender equality-focused businesses aligns with SDG 5. One challenge is measuring impact consistently. ESG scores vary across rating agencies, and impact washing remains a risk. However, growing transparency and regulatory initiatives worldwide are improving accountability. Balancing financial returns with social impact requires strategic diversification. Understanding available data and setting realistic expectations can help investors make informed decisions that reflect both their financial and ethical priorities.
John, you helped create the Calvert Principles more than a decade ago. How did that framework change your own view of investing when you first implemented it?
That's a great question. And your video we just watched mentioned the Sustainable Development Goals, which, of course, was backed by the United Nations. And whenever you're creating global principles, I think you look to norm-setting organizations like the UN, OECD, other governing institutions or multilateral institutions that we have around the world to think through the set of characteristics that are really applicable to the global commons, if you will. And so one of the things that happens going through the process of creating those types of principles is thinking about your situation, your view, your values versus the values that are going to work globally for a population base that may have little in common with yourself. So one part, Andy, was kind of going through that exercise and thinking about the impact that companies have on individuals around the world, people who will come in the future as well, who may have nothing to do with capitalism or the investing landscape, and taking that kind of broad overall view. So I think that was one change, and I think another view is around social license to operate. All companies have some adverse impact on the environment and on certain aspects of society. No company is just positives, that's for sure. So really kind of thinking through the concepts of net benefit. Does the company create a net benefit to society, or is the company simply profiteering? So those were things that you kind of dealt with in creating the principles that I think are additive to this discussion.
I look forward to digging deeper into that. Kristin, I know that you've built portfolios with social justice and gender equity as core themes. What was a moment that made you pivot from traditional finance to purpose-aligned investing?
Thanks, Andy. Hello, everybody. It's great to be here. And so I grew up in a trading firm where we did algorithmic trading, high frequency, buy low, sell high, largely in derivatives. And when we ended up selling that business, there was time to step back and say what is needed. And what I saw at that time was that individual investors, endowment investors, large institutional investors all really needed a way to engage in public equities that was more meaningful, more purposeful. We do get the economy that we invest into. That sounds really obvious. And yet each one of us has a role to play. And so making it easier for every investor of every size to be able to invest into the economy that will work for all of us. So I started impact investing in 2007, and then NIA Impact Capital evolved from that as a way to support investors. And so very similar to what we've spoken about already is really just asking the question, what is needed for people and planet to not only survive, but to thrive together. And then what will the capital markets reward for? And that's really what we do at NIA is we start with the end in mind. We look for solutions focused companies whose revenues are coming from the very solutions to our greatest global risks. And then we look for very well managed companies. So that's where we weave in gender lens, I for racial equity and social justice as well when we're talking about human capital management.
Manel, your forthcoming book reframes ethics as foundational to economics. How did the systems perspective alter your approach to thinking about portfolio design or asset allocation?
Well, I have to say that all science is grounded in philosophy, but there's a few group of sciences, the natural sciences, that we have somehow a world hypothesis that grounds them. But when it comes to the human world, I saw that what was missing was a human world hypothesis in order to ground the human sciences. And the most fundamental of all was ethics, the same as in the natural sciences was physics. And that's what got all this started.
And John, I want to ask you, there has been some pushback more recently on ESG. Where do you think we stand today?
There definitely has been some pushback on ESG. I think that the pushback actually predates the change in government administration in the U.S. And is, I think, largely rooted in challenges that we have with data. ESG data, I think, really created an environment where ESG investing was subject to challenge. You mentioned greenwashing in the intro. In addition to weak data regarding a company's impact on the environment, there's also data, information that companies provide or managers use that overstates positives. So I think the pushback, was made possible because of challenges in the information that investors have available to really understand a company's impact on the environment or really broader impact. I think that the industry, the investment industry, I think the sustainability segment has been working hard to address those issues and to attempt to strengthen the information set that we have to work with so that investment decisions can be viewed more logically and can be easier to understand in terms of how that is changing a portfolio's exposure to greenhouse gas emission risk or climate risk or social justice issues. So I think it's beginning to be addressed, but I think there's quite a bit of work left to do. So those are some initial comments on the ESG pushback. I do think, Andy, that the outcome is going to be a stronger investment discipline, a stronger set of investment strategies behind sustainable investing or ESG investing. I think the data will be addressed, the disciplines will be strengthened, and I think that over the course of a fairly short period of time, the industry will be strengthened, but certainly facing some pushback today.
Kristin, any thoughts?
So the pushback has been really interesting, I think, in that, a couple of years ago, no one really knew what we did. This was very niche. It was over on the side. And now that there is pushback, people are starting to know what the letters ESG, environment, social government, DEI, diversity, equity, inclusion are. And they're starting to have opinions about that and starting to ask questions. And so, just as you mentioned, it is time for us to, as an industry, make some further definitions. For us, we see this both as a way to measure risk, as far as what types of, in the case of what types of risks could happen to your company based on the rate of climate change or the rate of extreme weather. It's also an incredible way to look at opportunities as far as where our industry and where our economy is going and where can we invest for that transition. Similar with the S, we're seeing definitely pushback about what does DEI mean? What do those programs mean? And yet there's some pretty clear financial research showing that diverse teams have stronger returns, are more innovative, and can actually have better governance as well. So it's an interesting time to be in this. And I don't say that I welcome the pushback, though I welcome the dialogue, and I welcome us all jumping in and really making some commitments about what does this mean, what are the best business practices, what are the best investment practices, and then, as we mentioned earlier, there's greenwashing too, so and pinkwashing, and how can we be really attuned and really get onto the same page about what we mean when we're talking about these terms.
Let's go to segment 2. We're going to talk about investment decision making.